CK Narayan is with us to tell us whether the market is ending or about to go in for a deep correction, or this is just one of those shallow falls which will get bought and eventually newer highs will happen. CK, good to see you after a long time. How have you read the last couple of weeks of trade, and do you think the trend is still intact?
Well, we have all had a nice time ever since March, and like they say, all good things must come to an end, and it does seem like the signals pertaining to an ending scenario are all slowly getting into place. From a technical standpoint, we primarily look at about 4 to 5 different things. One is price, one is pattern, sentiment, the time, and momentum. Now, if you look at the markets from such a perspective, I think the most significant one which I use is always cycles based on time, and I had this whole series sort of running out of port time by about 16th of October, and that happened to be the highest close so far. Subsequent to 16, the market has been on a successive 7-day sort of decline, which again is something which has not been seen ever since the rise from March has occurred. So we do have a change in the pattern of declines, even though, let me add here, that the price damage has not been very significant, and it is only in the last couple of sessions that we have seen trendline breaks and moving average breaks, which most people generally take to be a signal for a change in trend status. So from that perspective, the pattern is also getting in place. Sentiment has veered around from why is the market going up 2-3 months back to why is the market going down, because now everybody feels that fundamentals are better and policies are better. See, the credit policy was not too bad, or the world seems to be coming out of recession, and so on and so forth. But the fact remains that we only try to find reasons to fit whatever is the price move which is going on. So I think there's been a 180-degree shift in the mood from why is the market going up to why is the market going down now. And these are typically these signals where the markets do make significant lows and highs. If you take momentum, the momentum at the higher end has flagged, and the signals which were holding up until recently have all let's say softened to a good degree. 7 days of decline has no doubt damaged it on the daily charts, but it's not enough to damage it on the weekly charts. But as ever, the changes will manifest themselves in the small time charts and only subsequently be shown up in the larger time charts. So I think if you look at it from all angles, the elements for a trend reversal are in, which means that we have a confirmation that intermediate term signals for reversal have been flashed by the market, and therefore all subsequent rallies in this market remain a selling opportunity.
Dr. Narayan, morning. Yesterday people were a bit rattled because of the break of that 4900 mark. If you do see a correction coming for the market, how much lower do you think it can move to, and what kind of range might it then settle in?
See, I think just like most people were not ready for the kind of upside move that we got from the March lows, I think many people are not ready for a larger downside move ensuing from here. I think grudgingly we would concede something like 4700, 4600, 4500 thereabouts, but not really speak about something lower, because it looks as though the markets may not do it. But then I think we have had a run of about 7 months wherein the index has more than doubled from the bottom. So I would look for, if you take a minimum retracement of this whole thing, you're looking at something close to 4150, 4200. And see, the trouble with a nice strong uptrend is that while it is going on, it's very exhilarating, particularly if you're long or holding stocks, but then it does not create those consolidations which help the market to cushion the falls on the way down. In this rise, we have seen a consolidation only around the 4500, 4600 levels. So I think that's the bare minimum we are looking at. But even there, if you raise perspective and look at it, it would still be very, very minimal. And I don't think after such a large run and sufficient amount of the time having elapsed, I don't think they're going to stop at 45, 46. maybe we'll have a bounce from there. We'll have an oscillating down market, and lots of people are bullish. Fund flow is still good. It's $14 billion of inflow from FI is nothing to sneeze at. Insurance money is still coming in, and so on and so forth. So maybe the fall will be slow, but I think the fall is going to be inexorable, and I am shooting for about 4150 on the index across at least the next 3 months by somewhere around middle of January.
The counter view to that, CK, is that this is one more of those shallow falls we've seen many times in the last 5 or 6 months during the trend being in place. And by the end of the year or in January, we'll actually go and pierce 5200 and go even higher. You think 5200 is a firm intermediate top in place?
I think the only signal on the bullish side that I would still hold out for sort of looking at higher levels would be what happens to the dollar and how that would impact the fund flow from overseas. As otherwise, I don't see 5200 or any of those numbers being seriously challenged in the near future. We have moved up from base level projection of earnings for the Sensex from 800, and it's been revised upward to 1000. Somebody has revised it to 1100. And maybe a few extra bullish people will also revise it to 1200. But at 1100 also you are at median PE at 14-15 times at the current levels. So I don't see from a valuation perspective people really coming and turning very gung-ho on the market. And indeed, if you look at what's happening in the markets right now, the good news is seeing some amount of marginal buying, but wherever a stock has some sort of an adverse news, it's being smashed, which would tell me that there is a significant amount of institutional selling which is actually hitting these stocks. Look at Punj Lloyd, look at the stocks from the telecom side. If you look at telecom and if you look at the delivery statistics, you have about 3,000-4,000 crores worth of stocks which have been sold by institutional hands, and all of which has got distributed in the retail hands. So you are having a situation where stocks which are not doing very well, the stocks are passing from strong hands to weak hands, and that is what really makes for a sustained sideways to downward phase which will last many months. And I see more and more of that happening. Each and every sector is up there, significantly higher, and there are very few islands to hide out in, and I think that is why I'm not in the bullish camp, and I really wouldn't bet my money on the market moving up or this being a shallow correction. We have waited for we all have been waiting for a reaction for a long time, and I think it is only during this fall that all the elements have got into place. So with all my elements in place, it would be foolish for me to go against what is the principal form of analysis and rules that we follow. So to answer your question again, no, I do not bet on the market going up and seeing significant higher levels.